Today we're going to take a look at EUR JPY, which is treading water above 173.50 after Japan's machinery orders data came in weaker than expected. If you're interested in trading with us, feel free to check out the links in the description below. So let's get down to it. Japan's Ministry of Economy, Trade and Industry said that core machinery orders fell 4.8% in September from the previous month, which was worse than the median estimate of a 2.5% decline. This suggests that businesses in Japan are starting to feel the pinch from higher interest rates and from the lingering effects of the pandemic, which continues to disrupt global supply chains. As a result, the Japanese yen has weakened against the euro, falling to its lowest level since late August. The pair briefly dipped below the 173.50 level, but it quickly recovered as traders realized that the sell-off in the yen may have been overdone. After all, the European Central Bank is still committed to raising interest rates further to tackle inflation, while the Bank of Japan remains an outlier with its dovish monetary policy. In fact, the ECB's latest policy meeting minutes showed that all policymakers agreed that a further tightening of monetary policy would be appropriate, and several members even called for a larger-than-usual rate hike in October. On the other hand, the Bank of Japan maintains its ultra-low interest rates and its quantitative easing program, despite the fact that inflation in Japan is much higher than its 2% target. This divergence in monetary policy is reflected in the interest rate differential between the two countries, which has widened to more than 300 basis points. As a result, the euro has strengthened against the yen by almost 20% since the beginning of the year. Looking ahead, we expect EUR JPY to continue its upward trend in the short term as long as the ECB keeps raising interest rates. However, we also acknowledge that the pair may face some resistance at current levels, as it has already rallied significantly this year. In addition, the Japanese yen may find some support from the 173.50 level, which has acted as a double bottom in the past. If the pair breaks below this level, however, we would expect it to fall towards the 170 zone. In terms of the overall trend, we remain bullish on EUR JPY in the medium term, as the European economy is recovering faster from the pandemic than the Japanese economy. Furthermore, the ECB is expected to keep raising interest rates until 2023, while the Bank of Japan is likely to keep its dovish monetary policy in place. Of course, there are risks to our forecast, including a recession in Europe or a stronger-than-expected recovery in Japan. Nevertheless, we believe that the fundamental outlook for EUR JPY is positive in the medium term. With that said, thank you for watching, and if you liked the video, please subscribe and turn on notifications. We would really appreciate it. Until next time, have a great day.